And welcome everyone to Gold Asset of the Day for the 6th of August, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know for the week ahead? Firstly, we have seen hedge funds and money managers again in the latest week significantly increase their overall net long positions on gold. In fact, at the beginning of this week on Monday, gold prices broke out over 2%. We have broken out to 6-year highs, tapping 1,475 US dollars per ounce. In fact, that was very much in line with what we had anticipated last week. We had suggested that you really wanted to look for buying evidence between 1,400 to 1,415 US dollars per ounce, that we may see some profit taking around the FOMC statement, which could then result in a great buy opportunity. And of course, we've subsequently had this very significant breakout at the Gold and Silver Club. Combined with two trades, we banked 730 points yesterday, which were trades that were taken after the FOMC statement just last Wednesday. So I hope a lot of you followed that analysis and were able to capitalize on the opportunity. We've had a very significant breakout since Thursday of last week, where gold revisited $1,400 and of course just yesterday broke out to 1,475 US dollars per ounce. Now, not only did we see the Federal Reserve last week, they cut interest rates for the first time in 10 years. We also saw an escalation in the trade war tensions between the US and China, with Donald Trump putting fresh tariffs, proposing 10% on over 300 billion worth of Chinese products. And with that, we saw a significant move later on in the session on gold. This is where we then rebounded significantly later on Thursday and right the way through to Friday. And in fact, just yesterday, the US have now accused China of currency manipulation, as we have seen over a 10% decline in the Chinese yuan following on from their devaluation of their currency. And again, that has provided another safe haven bid for gold. And we've continued to see ETFs, the GLD inflows coming into both the ETFs and of course hedge funds and money managers building out their net long gold positions. We had suggested previously that the month of August is typically a very strong month for gold, that it tends to outperform both silver and also platinum over the month of August, whereas in July often silver and platinum will outperform gold. It's the opposite over the month of August as we start to move into the wedding season in Asia as well, where typically demand does increase for gold. But from a seasonality point of view and a cyclical point of view, typically gold does perform very well over the month of August. We've already seen that from the very first day of the month. Gold starting the session around 1,400 US dollars per ounce, currently trading at 1,465 US dollars. I also had a lot of questions last week where we have bought in at a very key magnetic level around the 1400 level. We suggested to you to look at evidence between 1400 to 1415. A lot of you do follow us on YouTube and you follow our analysis. You will see where we've been very accurate each week with respect to these buying opportunities on gold. In particular, last week, a lot of traders were getting in on the wrong side of the move after the FOMC statement, where they had seen a trend line break down in price for gold. So we'd broken through a trend line, we started to break back towards 1400. Many traders were starting to look to sell short for a triple top of gold there. And this is where a research-driven approach will help you a lot in the markets. You really want to have an edge when you're trading the markets. As we've mentioned many times before, incorporate into your analysis not only technical analysis, but be aware of what the hedge funds are doing versus the retail traders in the market. Be aware of market cycles, be aware of seasonality, also the flow of the market, the sentiment, which will be as a result of the narrative, so such as recently with Donald Trump and also the China trade tariffs and the Chinese currency devaluation that we're seeing at the moment. All of these breaking news items and geopolitical news items will have a big impact on gold, and that will help you really to get an edge in the markets. That gives you the much bigger picture and you're able to be much more successful and consistent with your trade. So that said, what can we expect for this week? So gold prices right now, 1,465. We're looking at a range this week of approximately 1,435 US dollars per ounce, which we in fact tapped on Monday on the open. We're looking for a move up towards 1,475 US dollars, which in fact we hit just yesterday. We already hit a 400 point range in one day on Monday. So we may see a bit of consolidation over the course of this week. Of course, we're now not that far off that magnetic level of $1,500 per ounce, and we still expect more upside over the month of August. So essentially, I'm looking at the potential for a bit of a consolidation here. We do still have 2 long positions on gold right now with partial profits banking 730 points on Monday, but we're letting the remainder of those trades run over the month of August. If we continue to see the overall narratives that we're seeing right now and the bullish momentum that we're seeing into gold at the moment, I would anticipate a tap of $1,500 per ounce over the course of this month. To just have that on your radar at the moment. So with that, that has been Gold Asset of the Day, and of course I wish you all good trading.